Yeah, well, you make the offer because it keeps that momentum going, and it
Yes.
puts you in that state of mind of, this is going to happen, and
Yeah.
whether it's going to happen on this one or the next one. But for those people, just to finish, to wrap that point up, the one or two properties, and being in that monetary system, you got to get comfortable with the debt,
Yeah.
and so you
Yes.
got to start leveraging.
All right, guys. Hey, welcome to another episode of the Practical Wealth Show. So today I'm excited. I have Mr. Matthew Ablakan, and we're going to talk. This show is all things real estate, and investing in real estate. That's his passion. But let me give you a little bit of background. He's a really interesting guy. So he is the principal of a company called Millennials Choice. It's a group of companies. And he's been investing early. What you'll find, guys, is success leaves clues, right? And so winners win, and they've been winning for a long time, right? So he started his journey at a very young age, trading Pokemon cards, and it began to teach him a variety of skills, such as skills. That's where you play cash flow and Monopoly with your kids. How to negotiate, right? The importance of supply and demand. As he entered high school, okay, he began to sell I love you. Sport backpacks, hair straighteners to who? And dog tags to his peers. He began to dabble in the mutual funds, small scale, and began to learn more about investing. And in college, right? He worked part-time, jobs as a cook. See, there's no shame in his game. Manager of a couple of restaurants in order to pay his tuition, manages Chuck E. Cheese's, Johnny Rocket. So folks, you got to hustle. Right, you got to stay moving. That's what I want you to get from that, and we'll put more of this in the show notes. And but he's the founder and owner of Millennial Choice Group Companies, real estate, mortgages, insurance, education brand, and he's got degrees in education. So it's good because teaching sales. I want to show you skills make money. All right, honorary degree in law and society, a real estate broker's license. Probably to help his real estate investing, right? And so Matthew, tell him what I didn't tell him. Welcome to the Practical Wealth Show. So I'm excited to have a conversation with you.
Yeah, thanks for having me, Curtis. And creating content is not easy, I know for a fact. But at the same time, I think if we had this 10 years ago, which, YouTube was just starting out and there were no such thing as podcasts, I think we'd be even in a way better position than we are now. So for those of you listening, you guys have an advantage we did not have. So it's not harder. It's actually a little bit easier for you guys because you can learn from other people's mistakes when, it was very difficult for us to do so. So kudos to you, Curtis. Thanks for creating the content.
Yeah, my pleasure.
So the bio's great. The bio's cool. What I want people to take from that is that I was trying to find my path. I did not have my path during those times. When I was selling things in high school, I used to have two lockers, and I used to have one locker for books, one locker for goods. And thankfully, the school never, caught me or anything like that, because God forbid that you're, being entrepreneurial. They don't like that, right? So I was trying to find my path. I saw that very early. I saw the entrepreneur drive very early from my parents. They both came to this country. They left a communist regime. They wanted to start a better life for themselves and their family. They actually met in Toronto at a local church. So they came from the same place. They have different stories of how they left, came to the same place. None of their educational credentials transferred over. My parents were very educated back home. So they did what most immigrants and refugees do is they start renting, and they start getting into different businesses. And that's what my parents did. They tried coffee shops. They tried convenience stores. They landed on one convenience store that worked really well for them. And they stuck with that for 25 years and sold it actually 25 years later in the beginning of 2022. So they were able to build a good life that way. Like they had a house, cars, they raised two kids. They never had luxuries. They never went on vacations. They never had anything like that. But I would see the entrepreneurial spirit in them early on, even as little as grade 4, when I would be with my brother. We'd go to wholesalers that they'd go to. They would buy goods for a low price. sell them at the store, convenience store for a higher price. So buy low and sell high was ingrained within us at a very early age.
Yeah, it's funny. We're kindred spirits. I grew up, my family was in the supermarket business, right? And
There
so
you
I
go.
went to cash and carry and
Cash and carry, yeah.
right. I went to cash and carry
Yeah.
and or like me saw Rocky where he was punching the meat. I went to those places with my mother to buy beef for the store. And
Yeah.
and so, you know, you learn there's wholesale, there's retail and everything, and there and that whole thing at like a 6-year-old, 8-year-old.
Yeah.
And I'm in business because my dad was in business because he says you're never making money work for somebody else. So I never got that go get a good job talk. And so that's but if you see it, that's your vision of reality. So that's really cool. Thanks for sharing that.
Yeah. So the only difference between us in that sense is my parents became entrepreneurs out of necessity.
Yeah.
And so till this day, my mom especially hates that we became entrepreneurs.
Oh, really? Okay.
Yeah, because she wanted us to be, quote unquote comfortable, not worrying about finding business, things like that, getting a salaried position, because that's what they're used to back home.
Right.
And that was good for them back home, but it's not good for us now. I hated school. I hated every year of university. I had 5 years of that. I went to teachers college. My undergrad was in law. I'm a certified high school teacher, never applied to the school boards. I learned about the concept of landlords make money while they sleep when I was 17. I started doing research in real estate when I was 17, 18 years old. Bought my first pre-construction condo when I was 19 years old. And the way pre-construction works here in Toronto, in Canada, there's so much municipal red tape, which the municipality is your city, it's your town. There's so much red tape for a project to get approved that it actually takes about 2 to 4 years to just construct the project.
Wow.
But leading up to that, just to go through the city process and getting approvals actually takes about 18 to 24 months.
Wow.
Other parts of the world, 3 months, 6 months, whatever. So we know as real estate investors, it's not about timing the market, it's about time in the market. So pre-construction real estate offered us an opportunity here where you could buy something at today's price. You don't need the mortgage, you don't need the full down payment. 4 years later, you'll need the mortgage, you'll need the down payment, you could put renters in there, and you could secure something again at a price 4 years ago that you can hopefully speculate and there will be some appreciation. Appreciation is a big part of Canadian real estate investing, but also by the time it's ready, we know what happens with the cost of living. It tends to go up every single year. Rents will continue to rise, and we see a huge shortage of housing now in Canada, and we're seeing rents increase double-digit year over year, 20% increases, 25% increases, and that's only going to get worse as new housing starts get delayed because the market is slower, rates are rising, developers are not launching their projects. So we're going to see the cost of living continue to go up because, again, it's basic demand and supply. We're in a little bit of a turbulent market just because of the interest rate hikes, but pretty soon people will realize that, the world's not coming to an end just yet, and they need a place to live.
How is that affecting investors, and how is the interest rate hikes affecting you or in your company?
So volumes are down across the board. So we're not doing as much deals or transactions as we once were. But from an investment standpoint, it's really just impacting your ROI, your cash flow. That's really what's happening in the market right now. And cap rates are shrinking and things like that. So it's a tough time. It's a turbulent time. But I think the deals are still out there. I know the deals are still out there. I should say not I think, because I'm buying as well right now. On Remembrance Day, which is a holiday we celebrate here, where we remember, people who sacrificed themselves during, World War II and World War I. Like, I made one of the biggest deals of my career on that day. That was just, early November. So there are deals out there, but what I like to tell investors is there's a strategy for every season, and you got to kind of follow the strategy for that season. And right now, I don't see any benefit of buying a property that's a single family home that you're going to put one tenant in there. You're going to get a mortgage now. The mortgage is going to be at 6 or 7%. I really don't see any benefit to doing that right now in this very moment, but there are other opportunities that I think you could take advantage of.
Let's talk about that. What that's what our listeners want to know. What should they, because there's always opportunities. It's like you can't wait for things to change. You have to like get your skill level up and figure out where to pivot. What can you do? What's out there? And I think some people, and we'll talk about this later, even like there's realtors that have never seen a down market that were used to putting something on the market and getting, 15 minutes later, getting a $15,000, offer above offer price. That doesn't work that way, but there's still money out there if you will up your game and go to work. So let's talk about first what, as you're out there building your company, and what can our listeners be thinking about in terms of, hey, how do you continue to grow your portfolio?
So from a company standpoint, from a brokering standpoint for the realtor, realtors do themselves a very big disservice. They go with what's happening, and it's like you gotta be controlling your own narrative. And plain and simple, don't be falling into the narrative of other people. For the viewers and the listeners and on the show, there's always going to be something. It's a pandemic, it's climate change, it's war, it's this, it's famine, it's that. That's been the case for thousands of years. That's
Right.
what news outlets base their model on. It's fear mongering, right? So you can totally go down that rabbit hole, and you'll find nothing there for you besides misery.
Yes.
Or you can figure out things on your own, and with the help of the right team of people who have already achieved the level of success you want to achieve, or are doing something that you want to do, then that's where you can grow and learn and get better. So don't fall for somebody else's agenda, because then you're just going to be a sheep. You're going to be a victim. You're going to play the victim mentality card, and that's not how you succeed. So the opportunities that I'm seeing as an investor right now, make low offers. Like I know a lot of people are saying you don't want to insult somebody. And I was just speaking with a couple of realtors before I came on the show. And I get that you will insult people. I've insulted some people. I don't care, because that's they're getting insulted for their own reasons.
Right.
But then I did a deal where the seller actually asked me like, why this number? And I explained it to them, and we did the deal. They weren't offended. So make the deal happen, make some,
because the numbers have to work. Like you can't buy it wrong, right? You have to know, if your numbers, like, all right, I can't service this debt with any number less than this offer. Like it's math. And realtors, most realtors don't invest.
Yeah.
Right.
Exactly. Yeah.
So,
yeah.
You know what I mean? So
most realtors buy stocks and crypto.
Yeah.
The utility is in the real estate, you guys. People need a place to live, a place to worship, a place to go to school, a place to have their business operate, and the list goes on and on. And so that's the real utility, and people will continue to require those things. Shelter is number one, preservation, and all that stuff. So for those realtors who aren't diving deep into the stats, who are not in real time looking at what's happening in the market and how it's changing, and they're just focused on, oh my God, the Bank of Canada or Federal Reserve raised their rates. Well, you're not going to succeed, because all you're projecting to your network is doom and gloom.
Right.
In Canada, when the central bank makes an announcement, it's actually only impacting variable rate, which is adjustable rate mortgages in America. It's only impacting those interest rates. Our fixed rates are not being impacted by those announcements. So how come we're not talking about that? But there's this fear mongering that people get attracted to, and it's like, oh my gosh, rates are going to rise, and the market's just going to come tumbling down, and we're going to wait until the house that's $3 million is worth 1.6. I promise you, as time goes on, you will become less and less confident. You will not know when the bottom of the market has happened. You will not take action. And if property values in Canada drop 40 to 50%, we have a major problem on our hands, because our banking fundamentals and everything that we do here is completely different from the US market. So I guarantee you, those listening and watching, you will not be able to pull the trigger during that time. So
let me ask you this. Because I want people to get this, like, so you're still marketing, making offers, and trying to do even more of that on a day-to-day basis. Like sometimes I don't think people know what the work is. Right.
Yeah, well, the work is looking at 100 properties before you buy
Yes.
one, and
Mm-hmm.
looking around, always on realtor.com, realtor.ca, asking around, talking, maybe talking to wholesalers and finding out, hey, what do you have going on? Anything coming up? And really just putting it out there and not being afraid to say, I'll pass on that, I'll pass on that, I'll pass on that, or making an offer on some things. I had two offers going at the same time. One got rejected and there was no room to come back, and negotiations ended pretty abruptly, let's just put it that way. But
Mm-hmm.
then the second one was very welcoming, and they were open to making an offer. And when I secured that particular property, um, for $190,000 below asking price, the realtor, only yesterday said to me, I think you paid 65 grand below what I truly think it's worth, even in this market. And so the deals are there, but you have to be putting in the work. As a realtor, don't talk about real estate investing if you're not an investor.
Right.
Like, you're just doing your network and people a big disservice. I get it. You want to get that bag and you want to get that commission, but
Right. Right.
you got to become economically more valuable to people and to society.
Which is why your best investments is in yourself, like in your,
Exactly.
in your knowledge. Tell me about this. So what would you recommend for an investor or a buyer that is just starting out? Because I have a lot of people like this that have either trying to get started or they have one or two properties and they're looking to expand. Talk to them for a second. What should they be thinking about or do? It's probably some of what you just said, but I was just thinking about those. I want to bring that out specifically for that group.
So the strategy that you use to get your first one or second one is not the strategy you're going to use to scale.
Interesting. Okay.
The first and second one, probably what you did is you put all of your eggs in those baskets,
Mm-hmm.
your own money, maybe prime lenders, and maybe that's not going to be the strategy going forward. You're tapped out, you're maxed out,
Mm-hmm.
or whatever the case may be. I don't do joint ventures. I don't like partners
Mm-hmm.
personally. That's just my thing. I understand that one day if I want to get from 26 different properties to 100, then maybe perhaps I do,
Mm-hmm.
or I have to raise capital. So I get that, I understand that, but right now that's not my strategy. So it doesn't necessarily have to be your strategy either. I always tell clients there isn't a one size fits all. You have to do what you're comfortable doing.
Mm-hmm.
If those first couple of properties are not leveraged, you're playing the wrong game. You should be getting into real estate because of the debt. That's a huge portion, like huge factor in why I buy real estate, because I can access capital, whereas I can't access capital if I buy a restaurant or do something else.
Right.
And also you're playing the game of debt, like you're in that monetary system.
Right. The dollar, either Canadian and US, is debt.
It's all debt.
It's all
It'll
debt.
never be
Yeah.
paid back. That's what the politicians don't tell you, but it'll never be paid back because it just simply cannot be paid back. And so that is the monetary system you're in. So
Right.
if you're leaving your money in the bank, for those people whose monies are in the bank, especially the first time investors, where there's this analysis paralysis, so much information, I don't know to pull the trigger. Maybe I'm going to wait and see what happens. I'm not going to invest for the time being. You actually are investing. Don't fool yourself. Don't kid yourself. You are investing. You're just in a bad investment. Your bank account is a bad investment and it's not paying you anything. And you're also losing the value of your money every
Mm-hmm.
single month due to
Mm-hmm.
inflation, and the cost of living just keeps going up. So you are investing. Just remember that you are investing, but you may not be investing properly.
Okay. So let me just tie that one up. So if you got to think differently. You're not going to just save up money and buy it. You got to learn either raise money, maybe get a partner. I'm like you. I don't like partners for anything either. I don't like group decision making where I got to ask somebody
Yeah.
opinion. And which is we both probably have to grow out of that at some point, but I'm my dad's son, so he didn't like it either. So, and so they just have to. So you gotta keep learning, really. Keep getting your fundamentals, keep working, keep looking. Look, I like your formula. Look at 100. I heard Kiyosaki say this: make offers on 10 to buy one. And I think people just want to. What's the saying? Marry the first girl they kiss. They
Yeah.
just right.
Well, you make the offer because it keeps that momentum going, and it
Yes.
puts you in that state of mind of, this is going to happen. And
Yeah.
whether it's going to happen on this one or the next one. But for those people, just to finish, to wrap that point up, the one or two properties, and being in that monetary system, you got to get comfortable with the debt.
Debt.
And so
Yes.
you got to start leveraging, you got to start refinancing. I know a lot of people don't want to pay the high interest rates, but we've been spoiled as investors these last few years with near zero interest rates. Like we've been spoiled.
7 is not 6, 7 is, I mean, I'm older than you. That's not high. Like
It's not that high.
it's not high. And
No.
it's because a lot of people will think, well, this is where you got to learn how money works, right? So if you had a 4% and it went to 8, that doesn't mean the payments doubled, right? The
No, it's just
payment
your
may have
interest
gone up by
doubled.
like $180 or $200, like, and so, but your rents have gone up, haven't they? The rents have gone up 20%. So it's still relative in terms of the cash flow if you can get the property right. So you're still going to make money. I would say the rates don't matter if you're a good investor.
Well, let's not forget, you as an investor, you write off all your interest
Right,
anyways.
right.
So
What's the difference it make, right?
yeah, so the only thing that it's really impacting is your monthly cash flow.
Right.
So if you could weather that storm a little bit, in a year from now, if rents are jumping, well, if you buy a property where there's no rent control in it,
Mm-hmm.
now all of a sudden maybe you're not negative, maybe you're not breaking even, maybe everything's getting paid off and then some. So there's different strategies for every single thing, but you need to be comfortable with debt. If you're not comfortable with debt, no matter what you do, real estate is not the right investment vehicle for you because you're going to have to take on a lot of debt.
Right.
And
But
that's
there's
just
good
what
debt and
happens.
bad debt, right? If it's
There's good debt
what
and
I
bad.
call constructive debt, where it's really not even debt, it's leverage, because when we teach debt, Matthew, it's like we say, look, debt is when you have debt is a obligation where the only way you have to pay for it is with money you have not yet earned. That's what I call bad debt, right? And then if you're buying an asset, a duplex, a triplex, apartment building, your tenants are paying for it. So what difference does it make? And you're not trying to get out of debt in this monetary system. To your point, that's not the goal. And I think that a lot of people, they'll come out of Dave Ramsey, Susie Orman land mentally, from their investor. And I always tell people, you have to let that go, because that doesn't serve you as an investor, as a small business owner. It's a completely different mindset.
Yeah.
You have to grow into a different way of looking at money.
Well, just on that point, Dave Ramsey is first of all, he owns a huge real estate portfolio.
Right.
Nobody ever talks about, but
right.
He owns a huge portfolio. And when he's
I ain't sure he's not paying cash.
Yeah. And when he's talking about getting out of debt, he's talking about bad debt.
Bad debt, consumer debt.
Yeah. And Dave Ramsey's strategies for different kinds of investments, they won't make you wealthy. They're not here to make you wealthy. So, but he doesn't talk about his real estate thing. So his principles are great principles, I believe, and they're scriptural, they're biblical. I get all that. But it's not to become super wealthy. It's to get you out of bad debt.
Right. And there's a sector that's who that serves, right?
For
You're
sure.
a spendthrift, and so he does great work within that. But then when you've turned a corner, then you've got to do different things if you want to get a different result, because it's not designed to make you rich. You've got to use good other people's money. You're going to use leverage. You're going to get to focus on cash flow and not, hoping the stock market goes up, all that other stuff, right? Let me shift gears. I'll ask you another question. So what's wrong? What's one thing that you can think of that people are doing wrong, thinking about in the wrong way when it comes to real estate investing, that you may one or two things that you can point your finger to?
Yeah, the biggest thing, and I've been talking about this a lot recently, is that people don't treat it as a business, and it is a business. Don't kid yourselves. It is the business of real estate, whether you're investing or you're a broker or whatever. It is a business, and the IRS sees it as that. The CRA, which is our IRS, sees it as that. So you need to see it as that as well. And if you're buying a rental property, there's going to be income coming in that's taxable in the form of rent. And then there's going to be expenses that are tax deductible items in the form of property taxes, maintenance fees, insurance, lawyer fees, realtor fees, interest on your mortgage, etc. And then there's obviously tax strategies around that. That is a definition of a business: money coming in, money going out, service provided. You're providing housing or the space to rent a business or whatever the case may be.
Right.
So I think the biggest mistake people people do or people make is that they're not treating it as a business. And in every business, there's ups and downs, there's good times and bad times. And same thing with real estate. I know so many people who have shot themselves in the foot because they buy something, they make some money on it, and then almost, a month later there's a drop, and then they panic and they sell. And it's like, well, you didn't treat it as a business, you kind of just treated it as a short-term investment, as kind of like a stock almost.
Right.
But I've kept all my properties from that first condo that I bought 10 years ago. I've kept every single thing. And with the exception of the second property that I bought, which I sold earlier in 2022, because it was an easy way for me to free up $600,000 to put into my primary residence, which I was happy to do. And I made money on my primary residence as well. I've kept every single thing. Other than that, I'm not a flipper. The couple of deals that I was forced to do with a couple of partners who controlled the deal were flips, but everything else in my portfolio I've kept. And I've seen rents rise. I've seen rents go from 1,600 to 2,800 on a single property. I've seen rents jump dramatically. And every single year, how I scaled my portfolio is I ended up just leveraging, refinancing my properties as much as I could. I was with alternative lenders. A lot of my portfolio now is either mortgage free if it's a piece of land or something, or it's with prime lenders. But then I've seen rents continue to climb and go up. So that happens with, again, 10 years in the market, not 1 year in the market. And I'm excited to see where the next 10 years go.
Yeah, I think people, to your point, they think too short range. They don't think long range. They don't think long range. People they don't look at it. My dad actually told me it takes 5 to 10 years to build a business. And I think people just want this immediate gratification, and they don't give their efforts time to compound, right? Because listen, inflation benefits real estate. So it's going to drive up your rent. It's going to, I won't guarantee. I think appreciation is not the reason to buy, but it will appreciate, right?
Right.
And so that's interesting. Let's switch gears again. I'm entrepreneurial ADD. Tell me about the name Millennial's Choice and how that came about, and tell me a little bit about your we'll talk about that, and then I'm going to ask you a follow-up question to the Financial Freedom Club.
Yeah, so real estate started doing really, really well. I was just showing my clients how, to do what I'm doing, and then helping the other clients who just want to buy their first home or sell their property or rent their property. And I wanted to grow something bigger than just myself. And I wanted to kind of build something that, not only will attract more success and will do well, but one day perhaps I can sell it. So I had the end in mind. And in order for me to do that, I thought I have to brand it. Starbucks, Nike, they have one thing in common: they've branded their services and their products. So they can capture more market share, and they can charge more for their product, and they have a loyal following and all that good stuff. So I wanted to create a company. I didn't want to name it Matthew Ablakan Enterprises or whatever. I wanted to name it something that would be marketable and we could sell one day in the future. And I did not really know what to call it. I was thinking of all kinds of names. And then with my teaching background and my experience, they always taught us to build your lessons with the end in mind. What's the project you're going to give to the students at the end of the year? You need to prepare them for that project. So I said, all right, let me think of the end in mind, and who's my target audience, and what am I personally part of? And I'm a millennial, part of the millennial generation. Lots of marketing around that, and lots of good news and bad news and negativity and stereotypes and all that fun stuff, which is fine with me. And then I didn't want to brand different organizations with different names. I said I want to keep it all the same: Millennials Choice, whatever, Millennials Choice Mortgages and Realty and all that.
Right.
So that word choice was the stumbling block until I was just watching a commercial. I saw the President's Choice commercial advertisement come on, and I said, oh, choice. And it was available, and I secured it wherever I had to secure it. And Millennials Choice was born. Financial Freedom Club is something that's newer. It's a division of Millennials Choice. It's our education arm.
Hmm.
And what we're doing is we're building member-only content that won't be available on our YouTube channel or podcast. And that content is going to be very, very in-depth learning about real estate. So different topics, not high level, very specific, very focused. And that's going to be something that you can just consume via our website, the Financial Freedom Club website. It's almost ready. It's going to be ready actually in the next few days. And you pay an annual membership and you'll be able to access all that content. So we were doing in-person events, kind of slowed that down this year. We had like 6 in-person events. We want to slow that down going forward and just create that content and bring it to you at a very, very low cost to create for a couple $100 a year, unlimited access to all the content.
That's great. Okay.
Yeah.
And so actually I had another follow-up question for that and it left me. So why is financial freedom? Because is that the result that you're selling basically to millennials? What's the you said as you build your lessons, you want to begin with the end in mind. What's the end for that, your target?
It's different for everybody. And the reality is people listening to this or watching this, not all of you are going to become billionaires. Like that's just the way it is. Not all of you will be worth 100 million, but that's just the way it is. That's just the way it's going to happen. And financial freedom is different to everybody. And I always, when I try to talk to people I know, my friends and family and whoever, what's that number look like for you? And the reason there's a number attached to it is because money is a tool. We use it. It's garbage unless you use it. It's useless. So what's that number look like for you? And the number has to do with how much money do you need in order to live and function. Right. And that number could be different for everybody because you want a particular house, particular car, number of children, are you married, are you single, all these different things that will cost you something every single month. And so what's that number that you need to bring in every month in order for your lifestyle and everything to be paid off? Once that's paid off, once you figure that out, then you're no longer living with what some people call within the matrix,
right?
Or within the rat race, right? You're no longer doing that because the money's coming in and it's paying for everything, all your expenses. And now you don't have to be tied down to a job that you hate. You don't have to be tied down to anything because now you're financially free. And that's what that means. It's financial freedom. So there's a number attached to it. It's money. And that financial freedom will lead to other freedoms. You have more time to do what you want, more time to spend with people you want to spend it with, and et cetera, et cetera. So that's what it's all about. It is about the finance.
I love that. So Matthew, tell them if they want to find out more about what you're doing and how to follow you, what's the best way to do that?
So my Instagram is the best way to connect with me. It's at Matthew Ablakan, just my first and last name. I will pop up. I've also co-authored a book with Kevin Harrington, one of the original sharks from Shark Tank, along with Robert G. Allen, real estate guru in the States. And if they want your listeners want a free e-version of that book, they can just visit financialfreedomclub.com/ebook. Ebook is one word, no hyphen. And I'll happily give it to them via e-version. And if you're ever in Toronto and you want to come by and meet us and get a free hard copy of it, let me know.
Dude, I was just in Toronto in August.
No, okay. Next time you're here.
Yeah, that's how I'll come back. We love Toronto. We're in December before the lockdown, and then we went back. December was nice. It wasn't cold. It was like only 35, right? And then we had a great time this summer, and so we'll definitely get in Toronto at least once a year because we love it up there. So
the weather's been good right now. We've been blessed with this weather during this time. It starts to get really cold in January, February. That's when it starts to really get cold.
Yeah, so I won't see you then, but
stay where you are.
My wife was like, well, let's go there. No, I want to go south, right?
But
it was, we had a really great time. We went to Bruce Peninsula.
Oh yeah. Oh, you went to, wow, that's funny that you know about that place.
Yeah.
That's 2.5 hours northwest of where we live.
Okay.
Yeah, and we go there every summer because my wife's family has a cottage up there.
Oh yeah, it was
Sable Beach. You visited Sable Beach?
We went to where the rock formation
the grotto.
is. Yeah, the grotto. Went to the grotto. That's where we went. Went to the grotto.
You went to Tobermory and all that stuff. Yeah. No, that's a big tourist. The water was crystal clear, right?
Yes. Yes, it was wonderful. So it was really nice. So
Buddy, my
yeah.
summer is comprised of being up there.
Okay. Yeah,
Yeah.
I see that. And
Yeah.
so anyway, let me y'all we could probably do this offline, but it was you made me think of that. I was like, oh, I'm coming, I might see you because we're coming back.
Let me
And
know.
so yeah, so guys, hey, listen, this is a great episode, folks. Real estate is, you got to stay in the game, you got to work a little bit harder. That is Matthew's message. Work harder, not even a little bit harder, like work harder, and you're luckier you'll get, because the stuff is out there and there's so many people that have quit. It'll be easier if you just stay, keep focused and moving forward. So Matthew, thank you so much. We will get all of his information in the show notes, and follow up and get that book, and listen, like, and share this episode. If you enjoyed it, leave us a review. Matthew, thanks again for being on the Practical Wealth Show.
Thanks for having me, Curtis. I appreciate it.